2 indicators. 1. Clean system. Beginners often add indicators when they're losing. I did the opposite. I deleted almost all of them, keeping only 2. And that's when things started to change. No 12 indicator dashboard, no secret paid tool, no flashing arrows. Just 2 simple, reliable lines that tell me which way to lean and when to get out. In this video, I'm handing you the whole setup, the exact rules I trade by, and worked examples so you can see it in action rather than just take my word for it. Quick honest word before we dive in. This is educational, not financial advice, and trading is not a get-rich-quick button. It took me a long time and a lot of red days to get consistent. But the reason I love this setup is that it's simple enough to actually follow under pressure, and simplicity. You can execute beats complexity you freeze on every single time. Stick with me, because near the end, I'll show you the exact trade type that made most of my best days, step by step. Setting up the 2 indicators. 2 minutes. Let's build a chart together so yours matches mine. Open a clean chart and strip everything off it. First indicator. Search for VWAP, the volume-weighted average price. When you add it, it shows up with extra bands and shading that we don't want. So, open its settings, go to the Style tab, and uncheck the upper band, the lower band, and the band fill. Leave just the single VWAP line, and I like to color it yellow so it stands out. 1 clean line. Done. Second indicator. An exponential moving average, an EMA. Add it, go to Inputs, and set the length to 8. Honestly, 8 or 9 barely matters. Pick one and stay consistent. I keep mine blue so I can tell the 2 lines apart at a glance. And that is the entire toolkit. A yellow VWAP and a blue 8 EMA on bear price. No RSI, no MACD, no stochastic soup. The whole edge here comes from understanding these 2 lines deeply, not from stacking 10 shallow ones. VWAP, the rule that keeps you on the right side. So what actually is VWAP? It's the volume-weighted average price in plain English. The average price everyone has paid for this market so far today, weighted by how much traded at each level. It resets each session, so it's a fresh read on where the day's true center of gravity sits. That makes it a magnet and a battle line. Price is constantly pulled back to it, and it's one of the cleanest retest spots you'll find on any chart. Now, the single most important rule in this whole system, and it's beautifully simple. I never go long below VWAP, and I never go short above it. That one rule keeps me on the correct side of the day's order flow. If price is under VWAP, the average buyer today is underwater. That's a seller's environment, so I only look for shorts. If price is above VWAP, buyers are in control, so I only look for longs. Break this rule and you're constantly fighting the crowd. Follow it, and you stop taking trades that point the wrong way. And think about why that works psychologically. VWAP is literally the market's average price for the day, so quietly drives everyone's emotions. When traders who bought higher get dragged back to break even at VWAP, many add or defend. When sellers see price sink back to the average, they lean in. You're not guessing sentiment. You're reading the one line that shows where the average participant stands right now. That's a genuine edge, and it costs nothing but the discipline to respect it. One more read that costs you nothing. The slope of VWAP. A VWAP that's rising through the session tells you buyers are in genuine control, and every dip is likely support. A VWAP that's falling says sellers own the day. And a flat, sideways VWAP with price chopping across it is a warning that there's no clean edge right now. That's a day to trade small or not at all. You don't need to overthink it. Just glance at whether the yellow line is tilting up, down, or going nowhere. The 8 EMA, your data-driven trailing exit. If VWAP tells me which side to trade, the 8 EMA tells me when to get out. And this is where the real money hides. My rule is simple. Once I'm in a winning trade, I hold as long as price keeps closing on the right side of the 8 EMA on the 5-minute. In an uptrend, as long as candles keep closing above it, I stay in and let the runner run. The moment a candle closes back through it, I'm out. It's a trailing stop, but one built on live data, the last 8 periods of real price, not an arbitrary number. This one habit changed my results more than any entry ever did. Most people nail a good entry and then panic sell the first green candle, leaving the bulk of the move on the table. The 8 EMA gives you a rule to stop doing that. You outsource the exit to the trend instead of your nerves. You can also use touches of the 8 EMA as quick scalp entries in a strong trend, but honestly its best job is holding your winners longer. Let the line, not your fear, decide when the trade is over. A word on timeframes, because people always ask. I build a picture on the 5-minute. That's where I judge the 8 EMA trail and most of my VWAP retests. If I want a tighter entry, I'll drop to the 1-minute to time it. But I never let the 1-minute noise talk me out of a clean 5-minute trend. Pick the 5-minute as your home base. Use a lower time frame only to sharpen entries, and let the higher time frame context set the bias. Zoom in for precision. Zoom out for direction, never the reverse. The core setup, the VWAP retest. Here's the bread and butter trade. I mark 2 obvious levels each session, the pre-session high and the pre-session low. Then I let VWAP tell me which retest matters. Say price is trending up above VWAP and above the pre-session high. I'm hunting along on a pullback into VWAP because that's the clean retest with the odds on my side. Price dips back to the yellow line. Buyers step in, and I enter long with a stop just on the other side of VWAP. The mirror image works for shorts. If VWAP is sitting below the pre-session low and price is under VWAP, then the retest I care about is the VWAP retest, not the pre-session low. Price rallies back up to the yellow line. Sellers reject it, and I short with a stop just above VWAP. Notice how VWAP quietly does 2 jobs at once here. It picks my direction, and it gives me the exact level to trade against. That's why I can keep the chart this bare. One line is pulling a lot of weight. The key discipline is patience for the retest. Beginners chase the first move away from VWAP and get shaken out. The retest lets the market come to you at a level you can define risk against. If price never pulls back and just runs, that's fine. You skip it and wait for the next clean setup. There's always another retest. You never have to force a trade in the middle of nowhere, and forcing it is exactly where the account damage happens. A quick clarifier that trips people up. Which retest do you actually trade, the pre-session level or VWAP? Let VWAP decide. Whichever of the two the rule points you toward is the one that matters. If price is above VWAP and above the pre-session high and it pulls back, you want the VWAP retest when VWAP is the level price reaches first and cleanest. The pre-session high is your context and target zone. VWAP is usually your trigger. When in doubt, the yellow line wins because it carries the volume behind it. Quick one before the good stuff. If this is already clearer than the 10 indicator chaos most channels push, a like genuinely helps it reach other traders drowning in complexity. No long pitch, promise. Now let's talk about the setup I get properly excited about. Confluence, where the magic happens. Now, the setup I get genuinely excited about. Confluence. That's when VWAP lines up with the pre-session high or low at the same price. Instead of one reason to take the trade, you've got 2 stacked on top of each other. A VWAP retest and a level retest in the exact same spot. Those are my A+ setups. The ones I size a little more confidently into. Because when 2 independent reasons agree, the reaction tends to be sharper and cleaner. You can stack even more on top when the day allows it. A stock or index that's open strong, ridden VWAP from the open, and stayed glued above the 8 EMA the whole way. On days like that, there's often no reason to sell for hours. VWAP holds as support, the 8 EMA holds as your trail, and you simply let it work. Those are the days that pay for the week. But they only show up if you've been patient enough to skip all the mediocre setups in between. Once the basics click, Here's a small upgrade. Anchored VWAP. Standard VWAP resets with the session, but most platforms let you drop an anchored VWAP from a specific candle, a major swing high, a big news bar, the exact session open you care about. Anchoring it to the moment that actually mattered often gives you a cleaner line for that particular move. Don't reach for this on day one. Master the session VWAP first, but it's a natural next step once the core system feels automatic. Sizing and where the stop actually goes. Let's make the risk concrete, because this is what keeps you in the game. The beauty of a VWAP entry is that it hands you an obvious, logical stop, just on the far side of the yellow line. Long off a VWAP retest, stop goes a touch below VWAP. Short into a VWAP rejection, stop sits a touch above it. If price closes back through the average against you, the reason for the trade is gone, so you should be too. No vague, hopeful stops miles away, the level defines it for you. Now, size from that stop, don't guess. Take your account, decide your risk 1 to 2%, and divide by the distance from entry to that stop to get your position size. A tight VWAP retest often gives a small stop distance, which means you can hold a sensible size while still risking only 1%. And because your target is a trailed EMA move that's often several times your risk, the reward to risk stacks in your favor. Small, defined risk plus a trailed winner is the whole engine of this strategy. A third quick example, GBP/USD at the London Open. One more, on forex, because a lot of you trade the pound. Picture the London Open on GBP/USD. Price opens, pushes above VWAP, and reclaims the pre-session high. That's above VWAP, above the level longs only, by the rule. Cable pulls back into VWAP, buyers defend it, and a clean candle closes back up. Enter long, stop just under VWAP, and trail the 8 EMA as London trends. Same three ingredients, a completely different market. The system genuinely does not care what the ticker says. Indicators support price action, they don't replace it. One thing I have to stress, these two lines won't magically make you profitable on their own. They're tools that work alongside price action, not instead of it. You still read structure, higher highs and higher lows, clean levels, the overall tone of the session. VWAP and the 8 EMA sharpen those reads and give you rules for direction and exits. But they're a co-pilot, not an autopilot. Anyone selling you an indicator that never loses is selling you a fantasy. And don't underestimate how much the simplicity itself is the edge. A cluttered chart with 10 indicators gives you 10 conflicting opinions and a reason to freeze at the exact moment you need to act. 2 lines give you a clear decision, which side and when to leave. Under real pressure, with real money moving, the trader who can act on a simple, rehearsed plan beats the one drowning in signals every time. Go and backtest this yourself on any chart. You'll see it holds up, and that proof is what lets you pull the trigger with confidence. Applying it to today's markets, July 2026. Let me anchor this to real markets as I record. Gold has been consolidating around the 4,000 mark, a huge round number, acting as the session pivot after a big run and a sharp correction earlier in the year. The Nasdaq 100 has been chopping in a broad band, roughly 28,800 up to 30,600, jittery on rate and geopolitical headlines. Both are liquid, both trend cleanly intraday, and both are exactly the kind of instrument where a yellow VWAP and a blue 8 EMA earn their keep. For a UK audience, you'll trade these as CFDs or spread bets, and VWAP works the same anchored to the session you care about, the London Open or the New York Open. The beauty of this system is that it doesn't care what you trade. Gold, indices, or major forex pairs like GBP/USD, the two lines behave the same because they're built from the same universal ingredients: price and volume. Learn it once, apply it everywhere. Worked example 1. A gold VWAP retest. Let me walk one through with clean teaching numbers. Picture a London session where gold opens strong and pushes above the pre-session high near 4,000. Price is above VWAP and above that high, so by our rule, I'm long only, and I'm waiting for the retest, not chasing the first candle. Gold rallies, stalls, then drifts back down toward the yellow VWAP line, sitting around 3,996. That pullback into VWAP is my signal to get ready. Buyers step in right at the yellow line. A 5-minute candle closes back up strongly, and I enter long. My stop goes just under VWAP, around 3,992, if price closes back below the average. The idea is simply wrong, and I'm out small. Then I stop managing and start trailing. As long as candles keep closing above the 8 EMA, I hold. Gold rides the EMA higher through the session, and I don't touch a thing until a 5-minute candle finally closes back under that blue line. That single trade can be most of a good day. Notice what made that trade high quality. Everything agreed. We were above VWAP, so the rule allowed longs. The pre-session high near 4,000 gave a level, and the pullback tapped VWAP for a clean retest that's confluence. The entry was defined, the stop was tiny and logical, and the exit was handed to the 8 EMA rather than my emotions. Same 3 ingredients every time. Right side of VWAP, a clean retest, and the EMA to trail. Simple, repeatable, boring in the best way. Worked. Example 2. A NAS 100 short, now the short side, on the NASDAQ 100 as a CFD. Say it's a weak session. The index opens soft and slides below VWAP, and VWAP itself is sitting below the pre-session low, around 29,000. By our rule, price under VWAP means I'm short only, and because VWAP is under that low, the retest I care about is the VWAP retest, not the low. So I wait for a bounce back up to the yellow line, rather than shorting into the hole. Price rallies into VWAP, sellers reject it with a strong 5-minute close back down, and I short with a stop just above the yellow line. From there it's the same trailing logic, mirrored. As long as candles keep closing below the 8 EMA, I stay short and let it slide toward the range lows. The instrument changed, the direction flipped, but the process is identical. VWAP picks the side and the level. The 8 EMA runs the exit. That's the point. One system, any market, both directions. Mistakes that break the simple system. Let me save you some pain. Mistake 1. Breaking the VWAP rule because the setup looks too good. Longing below VWAP or shorting above it feels clever in the moment and quietly wrecks your win rate. The rule is, the edge respecting it when it's inconvenient is the whole job. If price is on the wrong side of the yellow line for the trade you want, there is no trade. Full stop. Mistake 2. Overriding the 8 EMA exit. You panic sell a winner while it's still riding cleanly above the line, or you stubbornly hold a loser that already closed through it. The whole value of the EMA is that it removes that decision from your emotions, so let it. Mistake 3. Trading the messy middle. When price is chopping around VWAP with no clear side and no retest, that's not a setup, that's noise. Sit out. The best traders skip far more than they take. Mistake 4, and it undoes everything else. No risk management. 2 clean indicators won't save you if you size like a maniac. Keep your risk fixed and small 1 to 2% per trade. Put your stop on the far side of VWAP, where the idea is proven wrong, and never add to a loser to get it back. The setup finds the trade. Your risk rules keep you in the game long enough for the edge to show up. Discipline is the multiplier on everything I've shown you. The real edge, you versus you. Here's the truth nobody selling a course wants to lead with. You can have the best system in the world, and it means nothing without discipline and patience. You can know every rule I've given you and still lose. If you can't win the daily battle of you, against the urge to overtrade, to revenge trade, to break your own rules the moment they get uncomfortable. The strategy is maybe 20% of this. The other 80 is whether you can actually follow it when money is on the line. But here's the encouraging part. That inner game is a skill, and skills are built. If you show up every session, follow the rules even when it's boring, journal your trades, and keep the risk small while you learn, consistency comes not overnight, but it comes. I'm not more talented than you. I was just stubborn enough to keep refining a simple process until it worked. If you're willing to put in that patient, unglamorous work, you can absolutely get there too. What makes discipline achievable is a routine, not willpower. Before the session, I mark the pre-session high and low and note which side of VWAP price opens on. During the session, I only take the setup we covered, and I say it out loud. Right side of VWAP, wait for the retest, stop beyond the line, trail the EMA. After the session, I log the trade and one lesson. That loop turns good intentions into an actual process, and a process is what you fall back on when the market gets loud and your emotions get louder. Your drill for this week. Here's how to make this stick, and it's free. Put the yellow VWAP and blue 8 EMA on one market you like, gold, the Nasdaq, or cable, and open the replay or just scroll back over the last couple of weeks of sessions. For each day, mark VWAP's side, find the retest, and see how price reacted. Then check whether trailing the 8 EMA would have held the move. Do that for 10 sessions, and the pattern burns into your eye. You're not looking for perfection. You're building trust in the rules through your own reps. The whole system in a minute. Let's lock it in. 2 indicators, a yellow VWAP and a blue 8 EMA on a bear chart. VWAP is the day's average price, and your direction rule, never long below it, never short above it. The core trade is the VWAP retest in the direction the rule allows, and it's A+ when VWAP lines up with a pre-session high or low. Once you're in, trail with the 8 EMA on the 5-minute and hold until a candle closes back through it. Risk 1 to 2%. Respect the rules, and let discipline do the heavy lifting. Go and do the work I can't do for you. Pull VWAP and the 8 EMA onto your own charts and backtest them across a few sessions until you trust what you're seeing. Simplicity that you understand deeply will always beat complexity you can't execute. If this made the setup, click, subscribe, and turn on the bell next week. I'm breaking down exactly how I manage a live trade from entry to exit in real time. Drop a comment telling me which market you'll test this on first. I read them all.